Hello traders and welcome to another video analysis. Today is Friday the 9th of the April 2021. Let's take a look at the Forex calendar. What do we have here? We got the Chinese data CPI released of course during the Tokyo session. As you can see, they beat the expectations of 0.3% and they beat the previous reading of minus 0.2% because the actual reading was 0.4%. Very good CPI reading from China. PPI was better than expected as well, 4.4% versus 3.6% forecast and 1.7% the previous reading. So very nice data from China. So we will definitely take a look on gold and on Australian dollar as well. The unemployment rate in Switzerland is falling from 3.6 to 3.3%. Good news from Switzerland. Industrial production in Germany is lower than expected, minus 1.6%, which is lower than minus 2% the last reading, and of course was than expected 1.6% month-to-month data. During the London session, there are some data scheduled for release, but they are not very interesting for market participants. They will not have much impact on the prices. But during the New York session, we got unemployment rate and employment change data from Canada scheduled for release 1:30. So as you can see, the unemployment rate is expected to decrease from 0.2% to 8%. So very interesting data here. And of course we got some data from the United States. PPI as scheduled for release at 1:30. 0.5% month-to-month data are expected to be released today. So some important data, some less important data. We definitely take a look on the US dollar to the Canadian dollar. So let's just start with gold, of course. Let's start with gold because we got some CPI data from China. They might be actually influencing gold. And as you can see, the gold is still climbing higher after this blue trend line had been violated around the level of 1,700. The technical resistance $1,720 had been violated as well. Then it been tested, and now we are testing 1,755 level. And please notice that this is the part of 1,055, 1,060 supply zone. So those are two technical resistance levels marked with these blue arrows, which means they are kind of important. So what do we expect from this market is to break higher above this level and head towards 1,848, which is the next important technical resistance. If however the market will not be strong enough to break above this level, then it will likely consolidate or reverse lower towards again 1,720, and if this level is violated, then we will likely go even lower towards the swing lows at 1,676, which means that the downtrend will be continued to the downside. So please keep an eye on this current development around this level. If there's any breakout higher, or if there is any attempt to reverse the recent bounce. This is not that strong bounce, but it's still the biggest bounce since the top at the level of 1,956. So that's the situation on the gold. Let's take a look at the Australian dollar as well, because we have a very interesting situation here as well. What do we have? Head and shoulders pattern is still being played out. As you can see, since the lows of 25th of the March, bulls are unable to break above the trend line. They tried many, 1, 2, 3, 4, 5, 6 times already. They didn't break above this trend line, which means this trend line, this is trend line of course, and this is neckline because we have a head and shoulders formation. So please notice that this might be only kind of a consolidation attempt of a breakout to the upside, but it might not work that well. So if the bulls are not strong enough to go up, then it means that 7,564 level will be tested. Then of course that lows from the 1st of the April, 7,553 will be violated, and we will go lower to 7,463. This is the short-term target for bulls. Sorry, for bears, of course. But the next key technical support is 7,415, marked with this blue arrow here. If this level is violated, then it's very, very clear that the expansion to the downside might be even bigger, and the drop might be even more dynamic towards 7,346, 7,244. Very, very nice price pattern, head and shoulders, is being played out on the Australian dollar. So gold, Australian dollar, and was US dollar and Canadian dollar. Of course, we got the unemployment data here. Trend on the US dollar to the Canadian dollar on the daily time frame chart is clearly down. So we will just take a look at the recent developments. As you can see, the bulls are struggling with the recent bounce. Let's say it was somewhere here, 2000, oh sorry, not 2000, of course, 2.22% bounce, in line with the previous bounce, 2.21. So that's like a correction, one-to-one geometry, market geometry correction. Nothing wrong with that. Then decline, bearish engulfing pattern once the level of 1.2630 was hit, then decline like a 50%, bounce again, and second time, third time, bulls didn't have enough momentum to break above 1.2630, which is why this is the key level for the bulls. If they still won't have any momentum, and it looks like they don't, because it's still on the level of 50, which is kind of a neutral level, then of course this will be supply zone for the bears, and they will push the market, the price lower, and the market will of course reverse, and the momentum will be negative again. So the bears will be in control. Let me just make this line kind of like a ray, so we can see extend to the left, extend to the right. There you go. So we can see the next kind of resistance as well from the trend line this time. So this is important to have it in mind, because this is the long-term trend line. As you can see, it's been, well, not that long, because it's only like a let's say 4 months, the 21st of the December last year, almost 4 months long. So any breakout above this trend line will be kind of a good indication of the bullish strength. But as long as the market trades below this trend line, and if the bulls are struggling with the first serious technical resistance or supply zone, then we can say that bears are still in control of this market. They are still actively pushing the prices lower in the US dollar to the Canadian dollar. So the markets should sell the US dollar. The market participants should sell the US dollar and buy the Canadian dollar soon. So please keep an eye on these two levels. And at the end, let's take a look on Bitcoin. What is going on here? As you can see, not too much really. All-time high made at 61,632 has not been challenged yet. If we increase this, if we extend this short-term blue trend line, we can say that the market is flirting with $60,000 still. And then, of course, recent test of this blue trend line had been correct. I mean, the price bounced a little, but if we will not break above 60,000 and attempt to break above the high, then of course the market will reverse. And if the bears will break again below this short-term trend line, then of course we will attack $50,000 very, very soon. So kind of an interesting technical pattern technical setup apparently to keep an eye on. Right now, let's just move our blue arrow towards the level of 50,000 to see what is really going on this level, because it's 50,000 is lost, then some sort of bigger decline can happen towards the 41,893, and that decline would be 30% or even 31%, which would be the biggest decline in 4 or 5 months, or even more, or even more. So please keep an eye on 50,000. That's the first thing. Please keep an eye on the blue trend line here as well for eventual breakout lower. And of course, the uptrend is still intact, but bulls are struggling with 60,000 levels. So it's very, very expensive right now for the Bitcoin. We will see what are the plans of the market participants to do with this situation in the nearest future. That's everything for me for the Friday. Thank you very much for watching this analysis, and I hope I see you guys next time. Bye bye.